Hi, I'm Patu from freefincal. A couple of days ago, I had mentioned about Franklin India Dynamic PE ratio fund of funds, and in this video, I want to quickly show you why I believe that this is one of the best dynamic asset allocation or tactical asset allocation funds. Yes, it is taxed like a debt mutual fund, but for a mature investor who can think beyond taxes and who wants low risk in the portfolio, this is a fantastic fund, and I'll explain why. So this fund essentially uses the Nifty PE, and depending on what the value of the Nifty PE is, it will choose the equity and fixed income asset allocation. For example, now the Nifty PE is so high that the fund is invested 80% in a debt fund, I think Franklin short-term income fund, and about the rest of it is only in the Franklin blue chip fund, which is the equity component. So it will change the equity and debt component rather smoothly based on 5 PE bands. You may have seen my market timing videos where I change the PE rather abruptly. This changes it rather more smoothly, and it pretty much guarantees low volatility. The question is, by lowering volatility, does it sacrifice on returns? And the answer, you'll be surprised. So let's have a look at the rolling returns and risk. This is over 3 years, and you can see over 3 years the Nifty 50 returns compared to the Nifty 50 is in red and the Franklin fund is in blue, and you can see that they are pretty much comparable. And what is amazing is the significantly lower risk, almost like it's half. So this is the beauty of this fund. It is able to deliver market returns very close to Nifty returns at half the market risk, which is extraordinary, which is truly extraordinary. And this is over 3 years. You can see the same pattern over 5 years. In fact, there are certain regions where the Franklin fund has outperformed during terrible years or terrible equity years. Again, that pretty much half the risk. So this graph is the rolling standard deviation graph. For those of you who do not know, this is where let's say if, over a 5-year period, I look at the monthly returns and I find out how much each monthly returns deviates from the average monthly returns, and that gives you a measure of the volatility. So this is over 5 years, yeah. So, and is that right? Yeah, this is over 5 years. You can see that the return outperformance consistency is almost 46%, and the risk outperformance is 100%. Over 7 years, again, it has done extremely well, and the return outperformance is still 64%, and the risk outperformance is still again 100%. Over 10 years, again, brilliant performance, 61% outperformance. That means that the fund has bet Nifty 673 10-year periods out of 1102. Again, finally, over the 13-year period, and in this period, yes, there is a very long, given this duration, there is some underperformance. You can see that the underperformance has come down to 33%. But still, it is you can argue over the long term, risk will come down, and you can invest in Nifty 50 rather than this fund. But the journey matters. You can't for most people who say they have high risk appetite, they get scared at the first sign of the fall. So this will give you very good returns. This will give you comparable returns. Even if it is 2% lesser than Nifty, you are getting 50% lower risk, and that's extraordinary. And I don't see anything wrong with the fund. Yes, there is a debt taxation. So people who claim they are worried about the debt taxation should be able to manage their fund, the risk in their portfolio better. If you have a risk management strategy with your with your equity kind of funds, then it's fine. You don't need this. But if you prefer your sleep, you don't care a little bit about the taxes, extra tax that you need to pay, then this is a fantastic fund. I mean, that is the reason why I said in yesterday's wish list video that this fund should be converted now into an equity type fund by investing in a Nifty 50 ETF for the equity part and arbitrage part for the fixed income part. Then it will always remain an equity fund like taxation, and it will be able to give you comparable returns to the market, returns comparable to the market at 50% lower risk. This is extraordinary performance by any yardstick. So this is a very special fund, but it's only suitable for special investors. So thank you for listening. Bye bye.